It began, as these things often do, with a whisper. Terraform Labs, a darling of the cryptocurrency world, was in trouble. Their algorithmic stablecoin, TerraUSD, designed to hold a steady value of $1, had lost its peg. Panic selling ensued. The cryptocurrency market, known for its volatility, went into freefall. TerraUSD, once a beacon of stability, crashed. Its sister token, Luna, evaporated into thin air. Billions of dollars gone in a flash. The collapse sent shockwaves through the cryptosphere, leaving investors reeling and regulators scrambling. This wasn't just another market dip. It was a full-blown meltdown. The house of cards that Terraform had built, one built on complex algorithms and the promise of outsized returns, had crumbled. The question now was, who would be left holding the bag? The U.S. Securities and Exchange Commission, the watchdog of Wall Street, had been watching. They saw the warning signs, the red flags waving in the wind. Terraform, they alleged, had misled investors, peddling unregistered securities and making promises they couldn't keep. The SEC's case was damning. Terraform, they claimed, had operated in the shadows, skirting regulations and putting investors at risk. The $4.5 billion settlement, a record-breaking sum, was a clear message. The Wild West days of crypto were over. This wasn't just about Terraform, it was about the future of an entire industry. The SEC was drawing a line in the sand, asserting its authority over the crypto market. The question was, would the industry listen? The fallout from the Terraform collapse was swift and brutal. The company, once valued at billions, was left in tatters. Its founders, once hailed as visionaries, were now facing legal scrutiny and reputational ruin. Investors, many of whom had poured their life savings into TerraUSD and Luna, were left picking up the pieces. The dream of getting rich quick had turned into a nightmare of financial ruin. The crypto market, already reeling from the collapse, braced for further losses. The Terraform debacle had exposed the fragility of the crypto ecosystem. It had highlighted the lack of regulation, the rampant speculation, and the potential for catastrophic losses. The question now was, could the industry recover? The long arm of the law, a new dawn for crypto regulation. The SEC's actions sent a clear message. The era of regulatory ambiguity was over. Cryptocurrencies, they argued, were securities, and they would be treated as such. The industry, long accustomed to operating in a regulatory gray area, would need to adapt. The $4.5 billion settlement was a wake-up call. It was a sign that regulators were taking crypto seriously and that they were willing to use their enforcement powers to protect investors. The question was, would this lead to a more mature and responsible crypto industry? Some saw the SEC's actions as heavy-handed, stifling innovation in a nascent industry. Others welcomed the clarity, arguing that regulation was essential for the long-term health of the market. One thing was clear, the crypto landscape was changing, and the rules of the game were being rewritten. Echoes of the past. Parallels to historical financial meltdowns. The Terraform saga, with its heady mix of greed, innovation, and regulatory failure, had echoes of financial meltdowns past. It brought to mind the dot-com bubble of the late 1990s, when investors poured money into internet companies, many of which had no viable business models. It also had shades of the 2008 financial crisis, when complex financial instruments, poorly understood by investors and regulators alike, brought the global economy to its knees. The Terraform collapse was a reminder that while the players may change, the underlying dynamics of financial markets remain remarkably consistent. History, as the saying goes, doesn't repeat itself, but it often rhymes. The Terraform debacle was a stark reminder that even in the digital age, the basic principles of financial prudence and regulatory oversight still apply. A fork in the road, navigating the future of cryptocurrency. The Terraform settlement marked a turning point for the cryptocurrency industry. It forced a reckoning, a moment of truth. The industry could choose to double down on its libertarian roots, resisting regulation and embracing decentralization at all costs. Or it could choose to embrace a more mature and responsible approach, working with regulators to create a more stable and transparent market. The future of cryptocurrency, it seemed, hung in the balance. The path forward was fraught with uncertainty. Would the industry learn from its mistakes and emerge stronger, or would it be consumed by its own excesses, destined to repeat the mistakes of the past? Only time would tell.